Welcome back again to the channel. In our last video, we looked at DXY, the top-down analysis for DXY. Now, today we are going to be looking at the top-down analysis for our GBPUSD. That is what we are going to be looking at today. You are supposed to take very key note of this video because right from this top-down analysis, we will be concentrating much more on the current and then the entry models in subsequent videos on Euro USDT and any other pair that we are doing the top-down analysis for. So now, without much time being said, if you are new here, subscribe to the channel and make sure you hit the like button. And make sure you share this video so that it gets to friends out there. Tell me what you want me to analyze for you in the comment section below, and I will do just that for you. Thank you very much. With that being said, let us jump straight into our top-down analysis. Now, when we look at GBPUSD, GBPUSD is doing a very great job, as you can see over here. Let me take all these things out. GBPUSD is doing a very great job, and if you look at it very well, you will see that this market has been in a very cool downtrend. You don't need a magician to tell you that this market has been trading all the way from the top to the down. You don't need a magician to tell you that. That is how this market has been trading all this time. So now that we know, we have been able to identify first the what is it called, the trend of the market. If we have been able to identify the trend of the market, the next thing we need to look out for is the current situation. That is what I trade with. The current situation always is the current situation. So we can see that market make this high over here. There is another one over here. There is another one over here. And the market has been making these lows. This is one, this is two, this is the third low, and then this is currently the fourth low. That is what market has been doing so far. So if we want to work within this market structure, then we are going to be looking at the current one, just this current one. This is what I refer to as my current market structure, because that is where the current price action is. So that is exactly what I should be looking out for, because that is what it is. Now, let us move on in. As you can see, like I've always been saying, if we are dealing with the current situation, we look at the last break of structure. We see that the last break of structure is right here. This is the last break of structure, and this around here is the height of that break of structure. So we fix our Fibonacci tool, and then we look for the OTE and then the 50% range to take our trade from. So that is it. That is that. As you can all see, as we can all tell, if you have been following this channel for some time, you should be able to tell what I'm saying. But with that being said, let's move on to the current situation. For the current situation, we have this break of structure. This is a beautiful but a shallow break of structure we have right here. It is a beautiful but a shallow break of structure, which is also a correct break of structure in my opinion. So if we see this, if I see this, what do? I just pinpoint out the lows, the highs, and then the current swing. That is what I do. So now let's look at the current swing over here. This will be our swing, our strong swing on the monthly time frame. Because this market is moving in a downtrend, we have our strong swing at the top. Then our weak swing will also be at the bottom of that will be the current swing. So this one right here is our current swing. So let me adjust it. This one right here is our current swing. So that is our current swing. Now, if we have all these swings, what do we need to be looking for? We have to fix in our Fibonacci you can tell why I chose this particular high and not this particular one. I chose this one simply because this did not break structure. This high over here did not break the structure. It didn't break any structure, so it means this high still qualify as a high. This is where this whole move broke structure, so that is why I still qualify it as break of the high, the strong high. So that is how I trade my market. So you should know that by now. If you have been following us for some time, you should know that by now. So with that being said, let's just move on in and then let's see. So we now have our breakout structure, our swing, our strong swing, and then the next thing I do for my what is it called? My trading strategy, I fix in my Fibonacci tool. I'm going to take away this one. I fix in my Fibonacci tool, then I find my optimum trade entry, OTE, optimum trade entry, and this is exactly where my optimum trade entry falls. Now, there are only two things in my head right now. Only two things in my head right now, and I can't just stand here and start giving predictions. So I need to see what market is going to do, because anytime I find this on the market, I find this break or structure kind of thing on the market, what I look for is OTE. I look for the market to enter into the OTE, give me a change of character over there, then we continue. Or another scenario is that I wait patiently around this area until I find my entry model. I do not enter this market. So because this market can just continue and break this to change character. This market can just do this. That is the reason why I take my possible time for the market to do whatever the market wants to do and give me the information. And when you join that information, you will be very much happy if the market is going in your favor, because from the monthly time frame, you already have it in your mind. So I'm going to take away my Fibonacci tool, and let's look at this. So now currently, this is where I am supposed to enter this market. This is exactly where I am supposed to enter this market, and my stop loss is supposed to be right above here, and then I take profit about some few pips above below the current low over there. This is exactly how my strategy is traded. It's as simple as this, and I wait patiently. Now, what else do I do? Now, I can't take a trade over here because this is the highest. This is monthly time frame. I can't take trade over here, so I move down. That is why it is called a top-down analysis. I move down, and when I move down, I know for sure that currently we are in the OTE. Let me go to the monthly and bring our OTE back here for us to be able to see it. Let's see if I can take it to the weekly. Then I'll take it off the hour. Okay. So if I go down to weekly time frame is telling me, oh my brother, you are already in the OTE, and over here I will be very, very much vigilant. Why am I being vigilant over here? Because this is the only place where market can reverse, because we are already in our OTE. So we are looking for market reversal. It doesn't mean because we are already in the OTE, we should just jump into trade. No, that is why we move all the way down to find a possible trade for ourselves. So over here, what do? I look for the current structure of the market. So as you can see, currently the market has been in an uptrend over here. Even though we know this is just a pullback on the monthly time frame, it has been in this beautiful uptrend over here. Now, if we have this beautiful uptrend over here, what we are looking for is that the market has come into our OTE. So we are expecting this market to move all the way down because the trend is our friend. So if the trend is our friend, we move with the trend. So we are patiently waiting for this market to just, give us that bottom and then rally all the way down where we can enjoy this. Now, if you look at this market perfectly, you will see that we have our current, purely current pullback swing over here, which is the weekly swing. We have it over here. There is no two ways about that. That is clean and that is clean and perfect. That is clean and perfect. We have that low over here. Then we also have the current high. The current high, we have it all around here. This is the perfect current high we have all around there. Yes. So what do? We are waiting for this market. Currently we are in an uptrend, so don't get it wrong. We are waiting for this market to come all the way here after this break of structure. This market should fix our Fibonacci tool, and this market should come all the way into our OTE zone right here. Now, into the OTE zone right here. If this market comes here, the next thing we are waiting for the market is this market to continue all the way up. But we now have it at the back of our minds that we are already in the OTE. So if we are already in the OTE, what are we anticipating? We are anticipating that this market should just change character right on the top over here. Then we have two targets. We have this current target over here, and then we also have this one, which is supposed to be broken for us to be able to call it, a trade. So that is exactly what we are looking for. Now, how do we determine whether this market is ready to come all the way here or to just break and continue from the monthly downtrend flow? That is what we do not know. So we look at this and then we have to go and one more step all the way down. That is daily time frame. This is where it all becomes much more clearer a bit. So now you can see there is no doubt that this market has been in an uptrend. Let me zoom out and then let's see. When I zoom out on the daily time frame, our current situation, it has been in an uptrend like that. So if I put this trend, what is it called? These two over here, you see that this market has been in an uptrend, which is a very beautiful uptrend market. The trend is our friend. So on each time frame, trend is our friend. Until the trend says otherwise, we are not living. So now that we know that, and we also have it at the back of our mind that in a monthly time frame we are in the OTE and we are supposed to break off from there. Now that we have that in our mind, let's see how we can handle this. This market can fail us, but then if you have that in your mind, you can analyze this market to the fullest. Now you can see that this market is already going in a sideways, but even in this sideways, it gives us a clue. Right now, we have this current low over here. We have also another low. We have also another low over here. So, and then the last low, you can see that the last low we have is this one, is this current one, because this is the deepest low that broke structure. That is why we call it the low. Now, so that will be our daily swing. That is a strong swing. Then we have this break of structure. Now we are anticipating that this market, since we have been able to identify all that, we are anticipating that the market should just continue from there. So we fix our Fibonacci tool right here into this low, waiting for market to tap into this beautiful line, this beautiful one over here. We are waiting for market to just tap into this and trigger our what is it called? And then continue all the move to the top, take our trigger out, and then continue all the way to the top. This is what we are anticipating currently. So we know that this low is a strong low. It's not supposed to be broken. Whatever happens over here, what we have in our mind is that this market is supposed to just move all the way up and hit this take profit. So that is what we are currently anticipating. Now, if this market has been able to trigger right here, we know that this market is supposed to go up here. So on the daily time frame, that is what we have. How do we know if this market will surely make it there or not? Then you keep on moving all the way down. So let's move on to 4-hour chart and let's see something. With a 4-hour chart, you will see that this market has been struggling. This market has been struggling. The market has been doing very, very, very well. It has come into our daily OT and then bounced back, giving us a change of character, came back again to take away all the strong low at the bottom over here. This is supposed to be a strong swing, but this strong swing is taken out after this beautiful change of character. We know that is a change of character simply because of this rally at the bottom here. Simply because of this move over here, which is therefore the what is it called, the pullback phase for the daily time frame. The pullback phase for the daily time frame. So with that being said, we know that if this market breaks here, market has changed character, and this change of character is supposed to take us to the target that we set at the daily time frame. But what happened? You could see that this market rallied all the way up like that and then came back again. Bush. So over here we have this beautiful rally which came all the way here, gave us this shallow movement and then move like this, and now we have this. So this is currently a very beautiful break of structure we have right there. That is a change of character. That is why I call it the 4-hour change of character. So for the 4-hour change of character, after the 4-hour change of character, what do? We fix our Fibonacci tool. And when we fix our Fibonacci tool, we use that to find our OTE. Now, we are expecting this market to go up like this, tap into the OTE, give us that our trade entry model, and then continue all the way down to take to come into this OTE. That is what we are anticipating. But what happened? You will see that this market have decided otherwise. The market have decided otherwise. So it didn't get into our OTE, but it tackled our 50% trade entry. Then what happened? It sponged all the way down to take this. So this that it took has also become another change of character on the 4-hour time frame. That is 4-hour chalk. That is what we will call this one. Now, if that has happened, what else do we need? We want to see this market after the chalk. We want to see the market rally into an OT. So now we have this chalk over here. This is the current swing. This one is the current swing. So we maintain that. And then we fix our Fibonacci tool. If we fix our Fibonacci tool, we are having up onto this side of the market to become our so this is currently what we have as our OTE. This is currently what we are supposed to be using as our OTE because that is our OTE level. Now, at this OTE level, we are expecting market to come all the way down. After market enters into our OTE, we expect it to come all the way down and take this low and continue the move all the way down to the current price target that we have. But this market, as you can see, is already it already came into the OTE, couldn't move above the OTE, came all the way back, and then has changed again. That makes the market indecisive. It has become a battle between what is it called? The buyers and the sellers. And this battle tells us that this market is in a pure sideways. So what am I anticipating over here? Right now, I'm just waiting patiently because I know patiently at the back of my mind that we are in OT on the monthly time frame. And if that happens, it means that on the monthly time frame, if this market is going to continue, then we are going to move all the way down. So right now, I am working in between these swings, this weak swing. I'm working in between the weak swing over here. I'm working in between this swing over here and then the swing at the top. These are the two swings I'm working in between. So I'm waiting patiently to see which of them is going to fail. I want to see which of them is going to fail. So whichever one fails, that is where I will follow the market. So this one, I'm working in between this guy over here and also this guy over here. These are the two strings I'm working in between for now. So with that being said, we just wait patiently and see which one goes first. Thank you very much for watching and thank you very much for your time. In subsequent videos, we'll be tackling the current situations and then we'll be moving on from there. Thank you for staying. Make sure you like this button, you like this channel, this video as well, and then share it so that it gets to friends out there. Thank you so much.